Hi, everyone. This is Jason Burack of Wall Street for Main Street, and today Chris Marchese joins me again for another interview. Chris, I just want to ask you about your opinion here of the Bernanke speech and the Fed speak. What do you think this means? What do you think the mainstream media is missing, the mainstream financial media is missing about what the Fed said today?
Well, the mainstream is saying that he said nothing, which couldn't be further from the truth. He did exactly what I thought he was going to do. He did what Bill Gross calls an operation twist, or he hinted towards it at least, coupled with cutting reserves, interest the Fed pays on bank reserves to spark lending.
For our listeners out there, Chris, who are not familiar, with Operation Twist, can you talk about exactly what that means in more simple terms?
Yeah, basically what it means is he's going to twist the curve. It's going to be, it used to be the front, the prime rates, the rates that we look at all the time, hear about them changing. But instead, they're going to target the 10-year, which mortgages are tied to. So it'll help all the by depressing that, buying those, investing maturing securities in the longer term, into the 10-year, it'll reduce that rate. And my guess is that thinks it will help some of the loan defaults that are going on, especially in the adjustable rate area.
So you think then that this will help some of the larger banks, who have some of their real estate portfolio, about to reset with those Alt-A and option arms, and this will also help some of those, I guess, people who have, some of those bad mortgages.
Yes, exactly. And, even if I think it could, prevent a lot of banks going under because they're in just that bad a condition. Take a look at Bank of America. It needed a bailout from Warren Buffett. $5 billion. Just to think that they haven't been able to strengthen their capital ratios over the past few years just goes to show this whole financial system is made from a house of cards, and it's going to be tipped over.
Yeah, Chris, and Bank of America just sold, or is trying to sell, their China construction bank position, and that's their best growth asset. So, it just shows you, if they're forced to basically sell like a margin call type of thing, I guess. I guess you could say this is basically a margin call for Bank of America.
It didn't take Einstein to figure this out. They bought Countrywide. I mean, what were they expecting at a Countrywide? That it would help them? What logical person comes to that conclusion? Only banksters.
Chris, I want to touch more about what you said about the Federal Reserve, the ratio paying amount of, interest on the reserves there. Can you talk about the fractional reserve banking system and what that could mean, if all that money is not kept docked at the Fed and those banks actually start lending it out, or say Congress, puts a law into effect forcing those banks to lend it out?
This is actually a double-headed sword. So I'll start with fractional reserve banking, basically what it is. If I'm a member bank of the Federal Reserve, you come in to me for a $100,000 loan. I deposit $10,000 of that with the Fed, and that originates the loan. And they can do that up to the point till their excess reserves run out. Well, they had run out, but since QE1 and QE2 and QE2.5, the Fed has injected $1.6 trillion worth of excess reserves into the system, which could be lent out to make, $16 trillion in new mortgages, credit, etc. But it has been deterred because the Fed has paid interest on the reserves that the Fed put there, which is kind of contradictory. And the banks haven't decided to lend any because there's no yield out there, and there's no incentive if they're getting an interest rate, just keeping their banks here. I mean, keeping their reserves here. So what the Fed hinted at, but not said, was that they can cut the rate at which they pay on reserves, and that way, that would, some banks might be more encouraged to originate small business loans and such things, or anywhere they can get a yield, really.
Okay, but that could also, let some of the inflation genie out of the bottle, Chris, right?
Yeah.
Because it could increase, velocity of money here. And we're already seeing, with the conference calls on a lot of these, multinational corporations and a lot of American businesses, the ones that, have higher input costs of, they're bringing in commodities to make a product or something like that. And you're just noticing on these conference calls talking about, the inflationary expectations are rising.
Oh, yeah. They should have risen a long time ago, but unfortunately America is still living in its fantasy world of yesteryear. And it just depends how long it takes for them to wake up and smell the coffee being reality.
Yeah, I agree, Chris. And, that's part of the linear thinking that human beings have. But, Americans have kind of more than other, people around the world, where, Americans our economy is based on consumption. We don't produce, as a whole, as a American population, we don't produce more than we consume. We don't save, really. And, basically, the American population it's going to have to shift. And this type of linear thinking, we're American consumers, we're Americans, we're better than everyone else, and we have the right to consume. The Americans that have this opinion are, going to be the ones that are going to be in the worst trouble going forward.
The worst part is we are so uneducated. It's just blasphemous how uneducated we are. And we have, I have a degree from this Ivy League school. Bullshit, who cares? I mean, just because you took tests doesn't mean you learned. Education requires learning applicable skills, which apparently our generation is not doing, except for a small few.
And it requires, constant learning, Chris, and, constantly questioning, am I getting this stuff right? And if, you're an economics major or a business major, do you know the Austrian School of Economics? Do you know that there's these other schools of thought out there? And people, don't know that. And the ones, who have heard of the Austrian School know very little. Or maybe, they were taught that in their boom-bustology class. But in general, though, most Americans, Chris, are, too busy. And the ones when they have free time, because, most of them have jobs that are, not too high paying, a lot of hours, and, they want to come home and watch, reality TV or these other shows. They don't want to, learn educational stuff like you and me do. So
exactly. So it's up to every individual to teach themselves at this point. It's come to that, such a sad point. American, history.
Yeah, I mean, American ingenuity and entrepreneurship, and American, I think I heard this talked about, like the prudential work ethic or something like that. The amount of work ethic for Americans, it's just changed.
work ethic? It's called sit down and do nothing ethic.
And get a government check?
Yeah. That's about all they're doing.
Okay, Chris, well, I want to go back to one more point at the Fed before we move on to something else. I want to talk about the dissent at the Fed now. So we have basically, Bernanke and Bullard who are on one side, who want to do QE to infinity. And then we have a few rational people at the Fed, some dissenters who are voting members. We have
It's rational, but...
well, in quotes. We have more open-minded Fed people like, Honig, and I forgot the other guy's name. But...
the thing is, I think it's a game that there will always be dissenters in this.
Well, so you're saying then it really doesn't matter then that Bernanke's opinion is always going to win out?
Yeah, it's just like Greenspan. In the end, it will be Bernanke who decides.
Okay, and do you think Bernanke's waiting here to pull the trigger on maybe something bigger or more massive? Do you think he's waiting on, like, Obama's jobs bill, and do you think that they're, like, in the future, before the next election? Do you think they're going to try to tie in some sort of stimulus program into like a new jobs bill?
I think what he said today is going to go with the stimulus, like reducing interest rate they pay on reserves or getting rid of it altogether. I don't know why they're paying it just to sit there. That makes no sense. They are going to, buy 10-year securities as other ones mature. So, there won't be as many foreclosures. They can also go, they could use reverse repos, or they can go out and buy assets and hope they can sell them higher at a later date.
Yeah, and this is something, that Bernanke, wrote papers on, right?
And then I think this might be coupled with some kind of Obama stimulus package.
Okay. So we'll keep our eyes out for that, Chris. I want to move on to the next topic here. And, I want to talk about the gold to silver ratio and the COT. Over the last couple months, we've just seen gold just explode to the upside here as, more and more people start to, accept gold as money, accept gold as, the ultimate safe haven. No paper fiat currency is safe. We haven't seen, we've seen the interference in the markets by the Swiss, who were one of the original safe haven currencies back a long time ago. And, no one wants a strong currency anymore. What are your expectations for the gold to silver ratio by the end of the year? And can you give us an update on the COT?
Yes. Well, gold has finally done what it should have done a while ago. And this talk of bubbles you see these talking heads on TV, they're just outrageous people. They have no credibility. They should not be on TV. They should not be talking this kind of rhetoric.
Well, a lot of these guys that are on TV, Chris, they're jack of all trades, but they're masters of nothing. So these guys are just traders, and, they might have read an article or two by, economic experts like you or me who are somewhat familiar with gold or silver, and they might have read an article or two, but, because they're already in the system, the way CNBC and Bloomberg works is if you're, already in the system as someone that they've interviewed, and the producers like you, they'll get on the show and they'll put you in front of a talking point that you know very little about.
See, if they got me on there, I would just destroy them on purpose. So hopefully people would realize not to watch a channel. It's garbage. It's not news. It's news how they want you to hear it.
Yeah, well said, Chris. Occasionally, there's a pretty nice guest on there that I like to see. They do bring on, Dr. Mark Faber.
Oh, yeah.
But, they always make fun of people like Faber, when Faber's, been proven right for a long time now.
I just wish someone like Jim Rogers would meet with Jim Cramer, and that would be an absolute...
I would love to see that, but it'll never happen.
Oh, Cramer. Talk about dumb.
Well, Cramer's one of the, if you've seen the videos about Jim Cramer and some of the tactics he used as a hedge fund manager, he definitely, cheated on some of the stuff. They're like, he spread a lot of market rumors to make some money there in some short-term trades. And he never got investigated by the SEC.
Yeah, so, so on to the COT. Let me pull it up here. So, the metals took a beating Monday, Tuesday, a little Wednesday, and the COT ends Tuesday. So the total unadjusted net position increased by 6,500 contracts. And but what's important here is the largest four increased by 2,700. But again, I think these were unwound, and maybe even more so, in the last 2 days.
Are we talking about just to clarify here, Chris, are we talking about a silver or gold?
Silver.
Okay. And, silver, silver's lagged gold a lot, and we've heard a lot of, I've talked, with other experts about this, and they're like, oh, I'm not going to buy silver now. There's just not enough investor demand to cover up the industrial demand that might be lost. And I disagree with those experts because, the numbers, the import numbers coming out of China and India for investor demand are still, exponential. We're still seeing just, exponential growth here for investor demand for physical bullion, out of developing countries. I'm seeing more and more U.S. people start to wake up to it. And, I love distressed assets. I love I don't mind buying the laggards and, being patient here. Have you been taking advantage of the gold to silver ratio, Chris? Do you think it's smart for investors who have some physical gold they bought at a cheaper price? Do you think it's smart for them to maybe trade in some physical gold for some physical silver at this point?
Yeah, you could do it now, or for 43 or 44 an ounce, or you can do it in a year or two for 15, 20 an ounce. It's up to you. But silver is just hands down the much better. It's a monetary metal, and it's a very important industrial metal. It's the best conductor of heat and electricity. And there are also just massive shortages being created left and right. I mean, silver is predicted to be the first element on the periodic table that goes extinct by the USGS and 3 other studies I've read. So, I mean, that just goes to show, the importance of this metal. And the fact that it has a monetary component just makes it that much more attractive.
Yeah, and Chris, this is before, a lot of the industrial uses that are just coming out, very in the last couple months and going forward, like the improvements in the solar market and in the RFID chips and some of the other things that are coming down the pipe here. The Silver Institute is predicting that industrial demand usage for silver will increase by, 35% by 2015, right?
Yep, and mining output will not keep up with that.
Oh, yeah, there's just no way that supply can keep up with that kind of demand. I mean, David Morgan has said in the next couple of years that mining output will increase, somewhat, but then after that, we're gonna hit basically a wall.
Yeah, there'll be a peak. You know what? Let's let peak oil. There'll be peak gold, peak silver.
Well, I think there is a lot of silver available, Chris, but there's, in terms of production costs, there's just no way that silver's coming out of the ground unless, the production cost for some of the silver that I'm seeing for some of these projects, the production cost is going to be, $35, $40, $45, $50 an ounce for some of the stuff. And there's just no way that anyone's going to even consider bringing that online right now, at least for, 3 to 5 years. We're going to have to see, triple-digit silver prices probably, and it's going to have to stay there for a while.
Let me tell you this. If I were an operator such as Burack, who produces a tremendous amount of silver, I would be putting that in the treasury and selling my gold.
And Barrick's doing the opposite, aren't they, Chris? Hasn't Barrick's, hedged a lot of their silver, and they've sold a lot of silver streams to, Silver Wheaton? So, I mean, that's, obviously you and me don't like Burack as an investment.
No, but I'm just saying, if I were in that position, I think, and people like me were in that position, that's what they would do.
Oh, yeah. Yeah, I completely agree in terms of, supply-demand fundamentals. I mean, I like gold and love silver. I think, silver is going to be the people's money. It's like what David Morgan says, you can't use, gold for everyday transactions. If and when physical bullion is remonetized to the point where, people are transacting every day in gold and silver, you're not going to see people, want to bring a gold coin on the street. It's going to be dangerous.
I mean, past that, I don't even know if silver could ever become money again just because it's so rare.
And it's, so important to so many, technologies on top of that. And that's why we think it's going to drive the price so high is the competition, between industrial demand and investor demand.
Well, yeah, once you get investment demand really going, it's going to spark a industrial demand.
Panic buying, right?
Panic buying. They're going to stockpile it. And I bet the gold to silver ratio goes 2 to 1, 1 to 1, 2 to 1, 3 to 1, somewhere out of that area, not 15 to 1.
Oh, yeah, we could definitely overshoot. I mean, the governments, in the past, if you looked at the historical monetary ratio, was 16 to 1 gold to silver ratio. That was a government dictated thing. Like out of the Earth's crust, the USGS says it's about 10 to 1, like in terms of how much silver to gold there is in the Earth's crust.
That's also considering epithermal deposition, where silver tends to be much more plentiful on the Earth's crust, but once you go lower, there's less and less.
Okay, yeah, but, David Morgan's done probably better studies with this than anyone else, and David Morgan is saying that, in terms of what they're actually pulling out of the Earth's crust right now, they're only pulling out, 6 or 7 times as much silver as they are gold. So, I mean, we could definitely go to those levels. I don't know how many years it's going to take, but, yeah, we could go to those levels, and the target, 1 to 1, like you said, or 2 to 1, we could overshoot way below, 10 to 1 on the ratio here, because you know how markets work when you add in that psychological factor there and the herd mentality. People are going to, there's going to come up, we're nowhere near this mania stage yet where people see, that silver is a one-way bet.
I'll say this. Silver, Dow to silver ratio, 1 to 1. That's mine.
Wow. Wow.
Yeah.
Wow. So, how soon do you think that could happen?
All I'll say is this decade.
Okay. Yeah, I don't want to put you on too much pressure with a really short time target there.
Yeah.
Okay, Chris. I want to talk about a few more news stories here, and then, maybe we'll get some stock picks from you, and you could tell people then more about the new private equity fund that you're involved in after that.
Great.
Okay, so there was some big news today from Taseko about the Prosperity Mine, I think it is. And can you talk about how that benefits Taseko and how that benefits Franco-Nevada, who had a gold royalty deal with them?
Okay, well, Prosperity is located in British Columbia, and it's one of the largest gold-copper mines in Canada. It'll be able to produce about 300,000 ounces of gold for 25 years based on current 2P reserves. And copper, I'm not so sure about the number. I think it's 70 million ounces. But you might want to double check that number. And anyway, Franco had done this deal with Prosperity, with Taseko a year ago when gold was much cheaper for $350 million up front in exchange for 22% streaming interest on Prosperity for the life of mine at an ongoing rate of $400 per ounce. And if you just go and do the net asset value calculations between $1,600-$1,700 gold, this adds about anywhere from $12 to $14 to Franco's intrinsic value.
Now, Chris, you said that Franco-Nevada, this is a gold stream for them, at 22%. Now, doesn't Franco-Nevada normally do, smaller gold royalty agreements that are smaller percentage? Is this a first for Franco? Oh,
no. Since after 2009, they have really started liking the streaming concept. They're first with Coeur d'Alene on the Palmarejo property, which was a steal. They paid $82 million up front in exchange for half of the gold on the property for the life of mine. And it looks like there's going to be at least 1 or 2 other deposits that will be in production at the same time Palmarejo will.
Yeah, they're finding, massive finds there for Coeur d'Alene. I actually like Coeur d'Alene a lot, too.
Yeah, they got
because,
the Guadalupe deposit. You probably know about it more than I do, but...
Oh, yeah, that's just like the first one they found, but their exploration team has said on numerous conference calls in the past that they think they're going to end up finding well over 750 million ounces of silver at the whole Palmarejo district by the time it's done, before it's ever depleted.
Well, I think they have identified the 3 main deposits, and that's Palmarejo, Guadalupe, and Tucson, Chaptilo. I don't know, I probably said that wrong. But, and Guadalupe or back to Palmarejo, that has been optimized so that it'll be doing 65,000 or 60,000 ounces a year attributable to Franco at $400 an ounce. And,
yeah, it was a really shrewd deal by Pierre Lassonde at the time.
Oh, yeah. And then this Guadalupe deposit looks like it can do 90,000 ounces a year. Whether or not it'll be brought on soon, it's hard to tell, and the others it's hard to tell. But I mean, my bet would be at least one is going concurrently with Palmarejo.
And Franco gets those gold ounces in the ground at what, $400 an ounce or $500 an ounce?
400.
Wow.
So I mean, assuming Guadalupe produces just 80,000 ounces a year, that's 40,000 to Franco, and you add Palmarejo, that's 100,000 ounces a year for 15 years, and they only paid $80 million. So it's just tremendous steal there. Then what they did at the end of last year was another steal in buying Gold Wheaton, who already had 5 acquisitions, 2 in precious the PGM group, palladium, platinum, gold, and 3 others in gold, the Sudbury properties.
Yeah, as a former Gold Wheaton shareholder, Chris, I don't know if you'll agree with me, but I think we were shafted by the amount of premium that was paid on that deal. I don't think as former Gold Wheaton shareholders we got nearly enough in that deal.
Well, yeah, I agree, but I also have the current Gold Wheaton warrants, which are Franco's now, that expire in 2013. And
yeah, I mean, that deal was, good for Franco-Nevada shareholders and not so good for Gold Wheaton shareholders, in my opinion.
Yeah, you're right. But,
Hey, management, didn't want to continue to run the company. I guess, some of these management teams, no matter how good the future prospects look, some of them just want to sell out at a certain amount of price. So the investors are going to have to be on their toes, and this is why, we don't just bet on one company. It's why, we find a certain amount of good companies. So,
I mean, Gold Wheaton shareholders benefit too. They reduce the risk to such reliance on South Africa. And, Franco is a great company now. Now with prosperity, I think it's one of the best gold royalty companies now. I think it's, I think they have a step up over Royal Gold for sure.
Yeah, and Pierre Lassonde just uplisted them to the New York Stock Exchange, right? So now, the stock's going to get more attention, right, from Wall Street.
Yeah, it'll be ticker symbol FNB September 8th.
Yep, and then the stuff, more Wall Street analysts will cover the stock. The stock will get more momentum. More people will buy and hold the stock. And since, Franco is paying an increasing dividend, they have a pretty good dividend. And it's going to...
Dividend. So if you reinvest that, it compounds hard.
Nice. So for people out there looking for yield and a good gold play, it sounds like Franco is definitely something people should take a look at, especially, once they're on the NYSE. Chris, before we let you go here, you wanted to talk about a few more junior mining companies, and then maybe we could talk about some other companies maybe where you still see some value across the commodity sector, and then we'll let you talk about your new fund.
Okay, great. So one that I've written about, but I don't think hardly anyone's really heard of yet, is Sandstorm Metals and Energy. And yes, it's the same management as Sandstorm Gold. So you get Nolan Watson, you get the whole team. And, they just have a tremendous advantage coming in, adapting the streaming concept into base metals and energy before anyone else at a perfect time. They have a much wider, spectrum of companies they can do deals with. There's just so many advantages here. They're well financed. They've accumulated 10 streams, 3 flag cornerstone assets in just 1 year, which is just blows my mind. And they are still on the hunt for more growth. So far, they have exposure to met coal, thermal coal, oil, natural gas, and copper. They're looking into further diversify that into some uranium, some iron ore, geothermal, other base metals. And, anyone should really take a deep look into this and look at the numbers. They are just incredible. I think this could be a 10, 20, 30 bagger over the, within 5 years, 8 years. Imagine if you invested in silver wheat in its infancy, or royal gold, or even sandstorm gold. You've already seen like abnormal returns. I think this will be the same case. The market completely ignored it, and by 2014 they'll be generating $50 million in cash flow. And if you do a EV to cash flow, it's only about 2.9 times, whereas the average royalty is 20 times. And
wow.
Right now it's going to be 2012 is you're going to see a significant ramp up in cash flows, and 2014 you'll see even bigger ones when those streams come on. So next year they'll have 6 of the 10 streams fully ramped up, and then the following year 9 of the 10. And they are also, I talked to management quite a bit, and they are looking to close 1 to 2 more before the end of the year, for sure, possibly more. So I would get in now, put it away, forget about it for a few years, and then look at it. Those are just one of those companies that you don't have to worry about operations, but it'll be a great investment. And people are scared just because it's 50 cents. Ooh, 50,
And the market cap's what, under 200 million now?
It's 110 million. So,
and considering their organic growth prospects, and the way this company is structured, they're probably going to be paying a dividend too in 5 to 7 years. They'll probably have a small dividend, so people are going to have capital gains and dividends going forward.
Yeah, one of their flagship streams has a 64-year mine life, and that's just on 2P reserves. Imagine if there's more resource converted. A 70, 80-year stream, that's just insane.
Yeah, and Nolan Watson has talked about, he thinks, because of the business model and the advantages that this efficiency business model, and the fact that, he's putting these energy streams in, which, tend to cash flow faster than like the gold and silver royalty streams tend to cash flow. So he thinks then that, in less than 10 years, he thinks this will be a multi-billion-dollar market cap company.
I think within 5.
Wow.
If we see a growth
so that would be more than tenfold return then.
If we saw copper at 6 or 8, or natural gas at 8, 9, 10, cash flows would just go through the roof.
And if the environmentalists have their way, we might see natural gas that high in the U.S. very quickly if they stop all shale production.
I know, really. And the best thing is they're guaranteed payback on almost all these streams for those who want some insurance that these get built.
Yeah, and if the streams don't get built, then Sandstorm Metals and Energy gets all their money back guaranteed then, right? So
yeah, or they get the difference. They're guaranteed a certain amount each year, and if
this is just, one of the most efficient business models I've ever seen. I love it. Maybe in the future, Chris, we can start our own energy stream company.
You know what? I wish I were 10 years older and I would have already been there. But, this is my pick to outperform anything else, any other equity.
Yeah, and with the whole energy sector, Chris, I don't know what your opinion is on the energy sector, but I'm of the opinion the market's just throwing the baby out with the bathwater across the board here in the energy sector. We're just seeing on the uranium miners, on the geothermal companies, on a lot of the oil producers, good solid quality companies. I mean, the world's not going to quit using energy no matter what, basically. We're still seeing so many people want to, so many consumers in the developing countries who want to, buy their first car. We're seeing all that stuff. And, I think energy is very safe here over, the next 3 to 5 years.
Yeah. And I think I think Sandstorm loves the fact that these commodities have been taken out back lately, especially oil. I'm guessing an oil or uranium stream will be done this year.
Yeah, and I mean, look at the price differential, between Brent crude, which is what's still like above $108 a barrel, and WTI, and, the rest of the world uses Brent. So the price of oil is still high. A lot of oil projects are still, getting into production and cash flowing, and, the demand is still there. There's basically a price floor in the demand now, because of all the, subsidies of oil in these OPEC countries who are subsidizing, their own citizens to go and buy gasoline for, 30 cents or $1.
See, I think they could probably do some really good, interesting deals in the oil sands if they got invested $10 million now.
Yeah, I mean, some of the problems with the oil sands, like the environmentalists are all after them, and the oil sands are so capital intensive.
Yeah, ones that are approved and they're almost funded.
Yeah, I mean, I guess they can come in at the end, but these oil sands projects, like, as a whole, like, it's an interesting asset, but the problem is that, the CapEx on some of these oil sands projects are just so massive that only the...
Even the ones that are operating.
Yeah.
They're looking for operators also.
Well, hey, Nolan, I'm never going to bet against Nolan Watson.
They lose everything.
They should not bet against Nolan Watson and his crew over there. They will lose. The man, like, I've heard interviews from Nolan Watson talking about how successful he wants to be. This is a young guy by, anyone's standards as a CEO. He's under 40 years old, already successful, former CFO of Silverwing. The guy literally sleeps in his office some nights, like, for a week straight.
Youngest CFO of $1 billion company on the NYSE.
Okay, well, we should stop saying superlatives about Nolan Watson here because people think we're just pumpers.
I mean, seriously, no one I won't hear anyone talking about Sandstorm Metals and Energy, except for myself, so apparently I have to talk to myself.
Yeah, I mean, you're exactly right, Chris, because, we look at the energy report pretty often, and the energy report does a good job, finding some of those undervalued junior energy companies. They cover uranium, geothermal, oil and gas, and they haven't really mentioned Sandstorm Metals and Energy. I'm just, shocked it hasn't been talked about on a constant basis.
Well, they'll regret it, but investors that get in now will make...
Well, considering, that most of the oil now is, like, by national oil companies, it's in geopolitically unsafe areas. We're continuously, to look for oil, we're going into a lot of, unsafe areas now. Like, look at all the fight over this Libyan oil and, the war and all the other stuff it's caused. And basically, it's been in there for Gaddafi's light sweet crude and his gold.
Yeah. But, so, on some other picks, I don't know if you're aware, Silvercorp dipped below $8 a share.
I've been watching it on my watch list, especially, Chris, after we talked during the week about it. Your valuation models that you gave us in the first edition of the Treasure Hunting for Precious Metal Stocks report say Silvercorp's worth about $17 a share now at current spot prices.
And I had to revalue it for some project increases, and they just made 2 private acquisitions that will add to production. I have it about 19 and change at $40 silver, 10% discount, 2% long-term growth. But more than that is you're paying for quality. And this management team is just excellent. They're great explorers. They buy pieces of land like they just did, and they'll turn them into absolute gems. of a deposit, producing a few million ounces a year.
Yeah, exactly, Chris. And for those of you our listeners out there looking for some yield, Silvercore does pay a very small dividend, but I expect it to grow, by a good percentage each year.
Yeah, it's at 1%, which isn't too bad for this early in the cycle. But and they have a strong production growth profile out to 2013 and past 14. Past that, it will depend on these new properties, which, by my calculations could add up to 1.3 million ounces all the way to 2. It's really hard to tell when they're this early. So Silvercorp, if you want a great play with silver that's not expensive, I would buy them now. First Majestic's around $22.50, so it's a little pricey relative to the price of silver, although First Majestic's extraordinary. It's just a great company. And any other picks? And Rico Gold. It's run a lot. I've written about it, and apparently no one read it. But they have just amazing production growth profile. And they will be releasing their PEA for their Guadalupe y Calvo project, which could be one of their biggest in September. So that acts as another catalyst. I think fair value lies around $25 for them. They're currently at 14. Kind of remind me of a new gold with a gold-silver hybrid blend. They have a lot of silver, so.
Yeah, Chris, and I still see good value out of mine finders too. Based on the fact that Dolores now hitting the numbers with their gold and silver production. Your valuation models say that mine finders is worth around 27 at spot gold and silver prices here. So there's still value to be made at mine finders, which is around 15.
Yeah. I'm waiting for. They need to do something more than Dolores.
Yeah, they have one other high production cost gold project they're going to put into.
They need to either go buy something or get bought.
Well, my whole point though was that people's money is still safe in mine finders because
it's great.
Yeah, no bankruptcy risk. They're cash flowing real well. So they need to figure out maybe some more organic growth or do an acquisition or something. But yeah, Dolores also has good underground potential. The drill hole results for their underground part of Dolores are very promising.
And Dolores is kind of weird that the silver grades get higher as they go deeper. So you're going to see varying production from silver relative to gold, going forward. But yeah, it's a very good play.
Okay, Chris. Well, I want to give you the last couple minutes here of this interview to tell people about the new stuff you're doing at your new fund, because you told me you wanted to get it out there that I think you're taking customers now, right? And you want to market your fund a little bit.
Yeah, just I know a lot of viewers know me personally, and a few have asked when I had my fund to invest, but we weren't taking money. So anyway, I am the portfolio strategist for the Vishny Fund of Vishny Capital, and basically what it is a I don't know if you call it a hedge fund, but we can call it a hedge fund. But they have a storage program that goes along with it. You could buy physical gold, silver, come and pick it up whenever you want. 10-ounce bars of gold minimum and 100-ounce bars of silver minimum. So they're not like some of those big trusts where you need 100 ounces of gold. And you can get it at a good price. As far as our strategy goes, it's conservative, but we have a lot of levered plays in there. So we think the returns will be very good going forward. It's almost entirely focused on gold and silver.
Chris, is the fund mixture, like the portfolio asset allocation, are you going to move into where you see value in the whole sector? Will you be like rotating percentages of like physical bullion, futures contracts, mining stocks, warrants, stuff like that?
The physical is going to stay. We're going to keep that at a fixed percentage. Yeah, of course. When we see value elsewhere, we'll shift some, common stock, sell off some common and put it in warrants. We find attractive warrants. Or if we want to buy calls on SLV or GLD, or we find, another company that on a relative basis looks cheaper. But so I'll start out with, as far as our equity holdings go, this equity holdings account for about 35 to 40% of the fund, and all the streamers and royalty companies are in there, plus some others I mentioned, and an additional 7 companies. So we don't want it too diversified, because then you can't really have huge outperformances. And then we also go short with options or common against such as financials. We were short 3 different financial ETFs during the big correction, so we did okay there. And we started implementing a strategy to gain leverage to the bullion price through SLV leaps and GLD leaps, and the rest is a bunch of warrants, like such as Sandstorm, Franco, you name it. Any good warrants out there, we own. So we'll participate in the mining rally and then some with those. So it's a unique setup. So I'll recap it again. 35% in common stock, 15% in warrants, 15% in options, and the rest physical holdings, I believe. Unless I'm missing some number. But anyway, if you want to, this is all off the top of my head. If you want to get in contact with me about it, and we have no minimums, be sure to send me an email. My email is Marchese, MARCHESE .chris@gmail.com, and I'll give you send you the prospectus and everything there. But given that I'm the portfolio strategist, you should probably go to Seeking Alpha or something of that nature, and I have about 100 articles published there. You can look at my track record. I don't know. You can ask Jason what he thinks of it. It's not too shabby, not to toot my own horn. So I think that's about it.
And Chris, do people have to be accredited investors in order to invest in your fund, or can it be like normal, people who just hear this podcast and have inherited a certain amount of money from a grandparent or a parent?
Anyone.
Okay, very good.
Yeah.
Well, do you have any last thoughts, Chris, before we start wrapping up here?
Yeah, maybe I'll go over. Still sounds crazy, but I think we're going to 22 gold by December.
2,200?
Yeah, and 62 silver.
That would be nice. I would like that very much.
Sounds nuts, but all good calls do, even if this is not a good call.
Hell, well, remember people thought, Jim Sinclair was crazy, a decade ago when he said his 1650 gold call when gold was at 250 or 300, and Dine said the same thing. So I mean, that's the type of courage and conviction you need and the research you need in order to outperform the market.
Yeah, exactly. I think also on the first or second time I came on your show talking about Sandstorm Gold, it was trading 60 to 80 cents. And
I think myself and all the other listeners who benefited from that just want to thank you for that one.
Oh,
publicly.
No, but I'm just saying that's when you see value like that, you just got to pile on. And
yeah, I'm actually thinking about adding to my Sandstorm Gold position, because I see a good amount of growth and I really like the management.
Yeah, it's come back a little bit. 175 high.
Okay, well, I just want to thank you for your time, Chris, and we're going to have you back on in the future here, and you can talk more about your fund in the future and more stuff about the Fed and the gold and silver market and other markets with the Austrian perspective.
Yeah, I mean, if I'd come on last week, I would have told you almost exactly what Bernanke said, because I think I was telling you that he's gonna say this, say that, and I mean, these guys are so dumb. People like me are able to know what they're going to say before they do.
Yeah, actually, you did. You said they would lower the amount of money they were paying, interest they were paying on the reserves. You nailed that, and then you talked about the focusing on the longer end of the curve, like right at the 10 years there. You called it. You nailed it.
Yeah, I mean, it just goes to show, I guess. It's not a good thing that I nailed it.
Well, the Fed is becoming so predictable now, and there's going to be our pullbacks here in gold and silver, and for the people that leveraged bet on gold long and didn't have any put protection or hedges in place, they got killed on it on the little brief correction here, but on the dips they should still be bought.
Oh yeah, I mean I love the correction. I've gotten to that point where I love the correction. It's like I'm a lady that gets to go shopping. I'm a 16-year-old girl that gets to go shopping. And every store is having a sale.
And you're making money off the sale too. That's the best part.
Yeah, seriously.
Okay, well, thank you very much for your time, Chris. We're going to sign off here, and thank you very much for all the hard work you do, and we're just going to get you back on here in the future for another Wall Street for Main Street podcast.
All right, sounds great. Thanks for having me.